Hello, I'm Tammy Green, and this is your Week in Forex from MaxiForex. Today, we will take a look at last week's market highlights. There was a lot of news coming out of the U.S. last week with Obama's State of the Union address, the FOMC's interest rate decision, the Bernanke question, and the president's new pledge to fight some of the big Wall Street banks. News from the FOMC was as expected. The members elected to keep the interest rate unchanged at 0.25%. This short-term decision to hold interest rates near zero is an effort to continue to support the shaky economic recovery. Last week, President Obama addressed the United States with his first State of the Union address, where he stood by his healthcare plan, but focused more on the economic climate. More bad news out of Greece, as this European country is struggling to dig out of its worst financial crisis in 16 years. Now let's welcome financial analyst John Gibbons to help us sort through these and other factors affecting the markets. Welcome, John.
Thanks, Tommy.
Let's start with Obama. What is Obama hoping to accomplish with his proposed fight against Wall Street?
You mean Obama v. Wall Street?
Exactly.
President Barack Obama punished big Wall Street banks Thursday and is urgently calling for limits on their size and investments. He has to try to stave off this big risk-taking that has been seen in the past to avoid an economic meltdown. The key changes will actually only affect a few high-profile players, including the great J.P. Morgan Chase and Company, but this will spare investment banks like Goldman Sachs Group Incorporated. This move could only undercut Treasury Secretary Timothy Geithner's strategy of maintaining close ties with the financial industry as part of the administration's overhaul efforts.
Well, I can understand after what the U.S. experienced last year wanting to put limits out there. Tell me about Obama's first State of the Union address.
President Obama was really walking a financial tightrope in his State of the Union address last Wednesday. He's facing an unexpectedly high unemployment rate, which is why he spoke at length about the need to spur job growth and ease the financial burden of the middle class. He also made it very clear that the U.S. debt is increasing at an unsustainable growth rate.
So how is his administration planning on tackling all of these issues?
Obama's deficit reduction proposals were baby budget steps, including a 3-year spending freeze, pay for new policies, and curbing some tax cuts. To find a really credible long-term solution to the fast-growing debt puts Obama in a tight political position.
How did the markets respond to all of this?
Well, the U.S. dollar reversed its uptrend direction after it had hit new multi-month highs against the franc and the euro on Wednesday, following the State of the Union. The greenback also slid from a 2-day high versus the yen and also weakened against the pound. U.S. stock futures indicated a slightly higher opening Thursday morning. This signaled a possible extension of the previous session's advances after Obama had committed for further job creation in his State of the Union address.
There's a lot going on in the U.S. right now, but before we move on, tell me about the decision on Ben Bernanke.
On Thursday, the Senate panel approved the nomination of the Fed Chairman Ben Bernanke to run the U.S. Central Bank for another 4 years. The Senate panel debated on this issue after the Senate Banking Committee voted 16-7 and sent it to the Senate for consideration. Despite him being Time's Man of the Year for 2009, he was blamed by his opponents for not spotting problems that led to the financial crisis, failing to protect consumers and supporting Wall Street bailouts.
Okay, so on to the other side of the map. Greece's economic crisis has been dominating headlines as well as really impacting the euro. Could you give us an update on the status of Greece's economy?
Greece is giving its best to dig out of the worst financial crisis in 16 years. Although they are trying to avoid a bailout, it seems that rampant bribery and tax evasion is hampering these endeavors. Greece, along with Bulgaria and Romania, is among the most corrupt countries in the European Union. Lowering the rating of Greece might cause the euro to drop versus the major currency and the dollar to strengthen, mainly because money will be leaving euro to safer places. Because lower the rating of Greece may be the first warning for lowering other ratings of countries in the EU, especially after Germany stopped its economic support of other European countries during the crisis period.
Tell me about the GBP. It took a fall this week. What do you think prompted this?
The GBP fell on Wednesday against all of the majors after prelim GDP didn't meet its forecast of 0.4%, coming in at 0.1%. Additionally, BBA mortgage approvals were 45.9K versus its forecast of 46.0K, with prior reading of 44.7K.
After the huge drop in the U.S. stock markets, what is the expectation in the short term, and how do you think this will affect the greenback?
More and more analysis that were published last month may be indicating a bearish trend in the stocks market in the short term because of all of the issues that we spoke of earlier. In this case, the US dollar will rise, as it will be considered a safe investment. By the famous Elliott wave theory, the last gain of the greenback took a 5-wave shape, which means technically that this is the main trend for the long term. So we can expect from this theory that the main trend is for the US dollar to continue to rise in the long term.
Thank you, John, for joining us. We appreciate all of your useful insights. Until next week, I'm Tammy, and be sure to visit us at MaxiForex.ru.